Banks selling debts. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. I've got my stein of coffee that I'm steadily working through, and I thought we'd have a look at this article from the ABC about Australian banks changing rules around selling debt to collectors. Now this was brought to prominence, and in September of this year I did a video about an article where debt collectors were actually taking more people to bankruptcy proceedings than anyone else. And I will link to that above here and you can have a look at it. But often the bank would sell them the debt. And who was it? Lion Finance was nearly doing as well as the ATO. The ATO is still sending a lot of people under. So the banks are changing their rules. What do you think, guys, before we go into this? Let me know in the comments. Do you think the banks are going to be fair and reasonable? Let us know. I'll have a stein while you write them down. Oh boy. So, Australian banks change rules around selling debt to collectors. Australian banks say they are making major changes to the way debts can be sold to debt collectors agencies after very disturbing reports of poor practices in the industry. In August this year, the ABC revealed debt collection company Lion Finance was suing hundreds of people for bankruptcy to recover debts. Well, that's what you have to do. I've gone through the QCAT process. I've won a claim against someone, 15 grand, and it's just the sheriff can't find him. I was naive. I didn't realize I should have got a personal guarantee. But you live and learn, guys. Live and learn. Always get a personal guarantee. Debt collectors can legally sue to recover debts as little as $5,000. But customer advocates were alarmed the tactic meant people were being dragged through the courts and risked losing their homes over small debts. Well, people are being dragged through the courts over, they will be, over spending $10,000 or saying something that someone else doesn't agree with in public. Why are they worried about this, guys? Our government is really restricting our freedoms everywhere, so this is just another thing. Now, the Australian Banking Association has launched a major step up in safeguards, which it said would protect vulnerable customers. ABA CEO Anna Bligh said the changes were designed to make poor practices a thing of the past. A thing of the past. Sure. There have been some publicly aired stories and others that consumer advocates have brought to our attention that are very disturbing, Ms. Bligh said. Obviously, people that owe debts have an obligation to pay those back, but it's important companies, whether they're banks or other companies, treat those people fairly, give them a reasonable chance to pay back their debts, and take action that is appropriate to the size of the debt. Are we going to have debtor prisons again? Maybe this is how we get volunteers to colonize Mars. Or there's a way you debtor prisons and then ship people out to the country. That's how we can colonize the center of Australia, guys. A next fleet of Mad Max cars. Under the new guidelines, banks will be required to proactively help customers find solutions before a debt is sold, such as restructuring, consolidation, and hardship support. Wait, they've forgotten to say the bank's new favourite strategy of sending people to the food banks. I'll link to that one as well, guys, if you haven't seen it, because I'm not making that up. Food banks, guys. It's happened in South Australia. To help people meet their mortgage requirements, the banks was sending them to the food banks. If a bank sells a debt, the debt collector cannot move to force bankruptcy without the permission of the bank. Banks will no longer sell debts if a customer has an ongoing vulnerability and they cannot sell debt that is being disputed by a customer. Oh, there you go. That is good. There will also be regular audits of all contracted debt collectors to ensure they meet the new guidelines. Consumer groups say guidelines will clean up unethical debt collection. Northern Territory parliamentarian Geoff Collins, who is also a lawyer, has been vocal in his calls for change to the debt collection industry. Mr. Collins defaulted on a credit card several years ago, and the balance of $5,950 was sold to debt collector Lion Finance. Mr. Collins was sued for bankruptcy by Line Finance in 2017 after a dispute over an administrative charge to a court-ordered installment plan to pay off his debt. It was incredibly stressful, he said. Oh yes, that's the other issue, just going through the courts and the level of stress. You usually get into that situation with a fair amount of stress anyway. That's what leads you to that situation. In my case, there were various things going on in my life, and this just adds a completely new layer to that process, which I can completely appreciate. Since he spoke publicly, Mr. Collins said he had been contacted by people across Australia sharing their own stories. The common thread was that they had a dispute, but they never felt that they were able to properly have that heard, he said. So a consultation process would certainly assist. He had been hoping for swift changes and said he was pleased banks would be forced to be proactive and help consumers before debts were sold. Well, yes. It's an area of consumer credit that really needs some review. Just given the number of people who fall into those sorts of situations and not by design, he said. Various things happen and people find themselves in those circumstances and nobody wants to be made bankrupt. Nobody wants to go through that process. None of them want to get dragged to court. Fiona Guthrie, the Financial Counselling Australia from Financial Counselling Australia, which consulted on the guidelines, said the new banking policy included important protections. There was a real urgent problem, so we are really pleased to see these guidelines because they're addressing real shoddy, unfair and unethical debt collection, she said. This is the first time that the industry has had a set of guidelines along these lines, and it's important because these guidelines are going to address some unfair and unethical debt collection practices. The ABA has also joined with consumer groups to ask the government to review the $5,000 threshold for forced bankruptcy. The issue of threshold is one the government, FCA's Ms. Guthrie, said. One of the things we're really pleased about is that the banking industry and the community sector have called on the government to hold a review into this woefully low $5,000 current threshold for bankruptcy. I don't like that idea. I do not like that idea at all. I want to be able to force someone into bankruptcy if they refuse to pay $5,000. $5,000 is see, this is it. They're only framing it against banks, but what about small businesses? $5,000 to a small business if someone does the dodgy on you. You know? Because remember, every time you do work for someone, you're providing them with a line of credit. Maybe it's just my own bias coming through here. What do you think, guys? There's lots of small business people that watch the channel, lots of tradies, a lot of other professionals. What do you reckon? Do you think $5,000 is too low? They want to raise it to $50,000. $50,000. Because the reason you do it often is just the strategy to get your cash. $5,000 to force someone into bankruptcy is just ridiculous. Our view is, in light of today's credit, it should be $50,000. Debt collectors say industry not surprised. Alan Harris from the Australian Collectors and Debt Buyers Association said the new guidelines were a reflection of current practices between the banks and the debt buyers. I don't think either party would be surprised by anything that's contained in the guidance, he said. He said the system has been evolving for some time and banks were already taking greater responsibility for the debts they sold. It is quite a number of the debt sales agreement, in quite a number quite a number of the debt sales agreements has been in place for a while now. So I see this just as rectification of what's happening or ratification of existing practices. In a statement, Line Finance parent company Collection House Limited said the debt collectors had increased the threshold for initiating forced bankruptcy proceedings to $20,000 from October this year. This threshold is well above the regulator's threshold of $5,000 and will significantly reduce the number of bankruptcy claims taken by Line Finance, it said. The company said it had also implemented additional approval requirements so that no customer or customers who had instructed a financial counsellor will face a petition of bankruptcy from Line Finance. So there you go, guys. The banks are changing their policies to deal with this. I appreciate why they're doing it. Personally, I think the drive to push it over to $5,000 could have implications for small business. Let me know what you think, guys. Like, share, and subscribe. If you want to help me produce more content, I have a Patreon and a Subscribe Star. I also have Amazon and eBay referral links where I receive a kickback every time you make a purchase and it costs you nothing extra. And finally, I have PayPal if you'd like to make a donation like that. It all helps. I really appreciate your support. Take care, guys, and have a happy International Men's Day. Talk to you later.